This panel is on structural, commercial, and technical moats. And we have a panel of operators. Let each one of them introduce themselves a bit. And from their description of themselves, you can tell whether they're going to be answering questions on structural or commercial or techno moats of Fintech. We'll start with you, Michael.
Hello, everybody. My name is Mike Rangel, founder, CEO of Novo, small business challenger bank here, US-based. We've grown quite a bit recently. We now service around 200,000 small businesses across the nation. Our core product is a small business checking account that lives on the mobile phone predominantly with a debit card as an extension. And as Sagar just shared in the previous panel, we've started layering a few different revenue generating mechanisms on top of that, which has been really cool. And yeah, that's me.
Let's go, Huey.
I'm Huey. I currently am a venture partner at GGV, waving the flag, really proud. But prior to this venture, I've been an operator my entire life. Started my career at a place now most people have heard of called PayPal, although when I first started, no one's heard of it. Like, what is that? Subsequently helped build Affirm from the get-go, and then most recently served as the president of Flexport Asia.
Great. Bradley?
Bradley Reese. I'm the Chief Commercial Officer of Checkout.com. We are a global payments organization sitting behind some of the brands that you all know and love. So companies like Uber and Netflix and Samsung are using our rails. We do pay-ins, payouts, really the movement of value on a global basis. I've also been an operator for a long time, had 4.5 years at Checkout, preceded by 5 years building Adyen's Asia Pacific operations, opening 6 of their current 7 offices in that region.
Great.
And Bradley also lives in Miami. I just want to make that clear to everybody.
Very clear.
Miami is a real thing.
It's the East Coast, it's far East Coast.
Yeah.
So I'm Arash. I'm our GGV's VP of Technology. I don't think I need to introduce GGV that much here today. But fundamentally what I do is I work with the investment team to support technical due diligence. I'm the one usually looking under the hood of everyone's infrastructure or code or how things are built. And I also work a lot with our platform companies, so our portfolio companies, with their CTOs or engineering teams, just to usually solve technical problems, challenges, or uncertainties.
And you were with GGV former investment before, and that's where we met you.
Yes, I was with a GGV portfolio company prior to being a part of GGV, where I was doing a lot of active engineering as well. So I have a lot of fortune to still be able to actively code and work on infrastructure every day, while still actively supporting and working in the investment space.
Right. So all 4 of them are operators. 2 of them are with GGV now, as in the capacity of operator as well. I'm going to start with Bradley first, someone who's not at GGV, and we talk about this 3 sort of important rails that got invented over the last decade or so, and that's Adyen, where you worked at before, Checkout.com, where you're at now, and previously we had a partnership for Stripe. Also spoke here. Kind of tell us why doesn't it take 3 these players? All of them are very sizable. What does that say about the underlying infrastructure that's in place that create a need to have these 3 separate players?
Sure.
Competing, collaborating in this space.
I could probably talk about 6 hours on this and still not get to the bottom of it, but I'll try and abridge the story. So to understand payments, first, it's very fragmented. There is no one provider who has more than 10% market share. Probably no one really genuinely has 5%. And that's what I'm saying. You're talking about how you move funds and value. You could argue Visa, MasterCard as networks themselves, PayPal potentially too, are slightly higher up the food chain. But when it comes down to kind of the intermediaries, so the organizations that the world's largest merchants look to work with to enable access to their customers, obviously via providing relevant payment rails in domestic regions, it's incredibly fragmented technically as well. So that's one of the challenges behind it, is that the moat in payments, I believe, is one of the largest that you'll ever find, because it is around having market-leading technology. It is around branding, which is debatable how much of a moat that can be. But there's also huge regulatory licensing and cap requirements. Like our cap table has to be pretty lush to be able to satisfy various regulators in jurisdictions where we want to operate domestically. But to look at kind of the 3 as a group, Checkout, Stripe, and Adyen, I think is actually a fair assessment. Adyen deserve a lot of credit. 2006, they actually reinvented what the payments value chain was. And this is kind of the mini lecture piece is, if you go down the street and ask the layman, how does your payment get accepted when you click book now on Uber or buy now on Amazon? No one really knows. They know that their bank is somewhere involved. They know they have this Visa or MasterCard branded card, but they don't know what happens in between. Traditionally, there were multiple parties which sit in between a merchant and where they want the transaction to get to, which is the issuing bank. There was a gateway, pings it off to a risk platform, pings it back to a gateway, which sends it to a bank, which licenses a processing platform, and as most banks view payments as a loss leader at best. They probably licensed this 30 years ago and chose the cheapest version. And then that technical platform operates to connect into Visa and MasterCard, VisaNet and BankNet, which then talks to the issuer. That took a long time for me to say, and it takes a long time for a transaction to go through that journey. So what Adyen did was collapse the 4 bits in the middle into a single state platform. So the risk, the gateway, the acquiring licenses, and the processing platform. Stripe did exactly the same thing later. Checkout are the most recent company to do that. So there really are only 3 payments organizations who are genuinely operating a single technical infrastructure, which encompasses the 4 key components of the traditional value chain. Again, the information asymmetries in payments are huge. Everyone in this room is intelligent tech investors, but I'm willing to bet what I just said may have been used to a lot of people here because people don't understand what the problem was that we were all solving. Adyen 2006, Stripe 2009, Checkout really 2012, our architecture was built. But if we look in our rearview mirror, we don't actually see anyone trying to replicate the structure that we have. So the differentiation around the 3 of us and the older school players, the Fiservs, WorldPays, Global Payments, these massive companies, is really around not having technological fragmentation, which enables our customers to really just have a much more scalable platform that they're operating with. I can talk again about where we sit against each other, Stripe, Adyen, and Checkout, but maybe I'll save that for a different bit.
Well, actually, I want you to actually expand on that. So what are each of the most that each of the 3 companies are building?
Okay. Trying not to rant. So Adyen, again, they started off as an online-only company. As you can see from a lot of what they're doing now, they tried to go into omnichannel, and they've done a very, very, very effective job of that. So really kind of the organization started focusing more into the large retailers, even though they had traditionally a lot of the tech companies on them. Stripe, again, you can see it from the press releases, they say the word enterprise or institutional at least 20 times a sentence. There's a reason for that. Everyone wants to swim upstream. Unfortunately, swimming against the current is hard. Stripe are an amazing company. I'm a huge fan of theirs. They solved one of the most key problems, which is, if I want to start an internet business, how do I accept my first transaction? And they are still the best company to go to get your company up and running. That said, they have hundreds of thousands of merchants, whereas someone like Checkout has a couple of thousand. We are solely enterprise. That's where we play. Everything we do is not really on a platform level. It's on a very bespoke level, how we view the data pertaining to each different merchant. So really, if you want to kind of try and separate the 3 of us, and our Venn diagrams heavily overlap because we have the same architecture, Adyen strongest at POS and definitely have had a core focus, Stripe strongest at SME, and I would argue that Checkout, we had second mover advantage. Our platform is a replicant of the other 2, but we just had technology which was built a few years later to build it on. Things like Snowflake for analyzing data just wasn't available in 2006.
Yeah. I'm going to put Rarish on the spot and call an audible. Which means I'm going to ask a question that he wasn't expecting. He's the pleased with the gadgets in our firm and tried different technologies of companies we're investing or competitors that our portfolio company competing against. When you were playing technology, trying a Stripe or Checkout Adyen or Checkout.com, what is your feedback from a technical engineer building stuff? How do you view these companies? Do they have any moat from a technical standpoint?
The biggest thing that, so obviously my experience with these companies is more direct, like actually trying to implement and integrate them. And it goes right back to Bradley's point exactly. When Stripe first came out, and as an engineer, and when e-com really started kind of becoming a thing, you needed to figure out how to implement payments on your site. And I remember the very first time I actually went exploring this, like using actual POS devices and having to program those essentially was like a really difficult task. Like getting the documentation, try to sort through it, try to understand what the error codes were, where the problems were. It's very difficult to read sometimes, and it's very hard to understand if you're doing something correct or incorrect. And it's kind of scary because you're dealing with people's money. And whenever you're dealing with people's money, you tend to not want to lose it, essentially. So one of the things that stood out when Stripe first came out is their documentation was the biggest thing that I think a lot of engineers were just gravitating towards. It was very easy to read. It was extremely easy to follow. And as Stripe continued to introduce more services, they introduced it with just very simple JavaScript bundles and made it really easy to just add stuff to your code and further make it easier to adopt. So it was one of those things where If you knew nothing about payments and you never had accepted a payment in your entire life, because that's just not something you did as an engineer or an average engineer in the 2000s, all of a sudden you put the stuff on your website and you started collecting money. And you're like, wow, that was really easy. And that was a big thing that stood out from Stripe. And all engineers gravitated towards it and became something, a ubiquitous tool that everyone just started recommending to each other. So it's not even technical, it's just speaking to a language that was hard for people to understand before.
How about others besides Stripe?
Stripe, well, I have worked more modernly with mostly consumer payment infrastructures. So one of the challenges I still find with enterprise infrastructure is still going global and international is very, very difficult. If you have to set up payments infrastructures in other parts of the world, that was actually very, very difficult to do. I haven't actually worked directly with Checkout.com because I haven't had to actually implement any actual enterprise stuff in the last few years. But back when I was doing enterprise payments cross-border, it was very much like contacting local banks, figuring out what processors they're using, and trying to work up through the infrastructure that Bradley described earlier. And it was a very fractured system, essentially. Adyen was still growing, essentially, at that point. But if you were building a cross-enterprise platform, unless you're doing huge volumes, like you really wouldn't be contacting those players at the time. But it still felt like a very fragmented industry and something that was very challenging to implement and introduce into a lot of technology. And I see it changing now over time. Like it's getting a lot more accessible to the average engineer. But I think enterprise payment solutions are becoming to the average engineer what Stripe was in the early 2000s, essentially.
Yeah. I'm going to switch gear a little bit and talk about credit lending, which is one of the new products that Novo launched. When you have so much of a sort of payout data on your platform from the SMBs that you serve, how does that give you the advantage to actually make lending decisions? And what kind of system or models do you have to put in place in order to take advantage of all that data that you're getting on real time that the banks don't?
Great question. I think the short answer is we're still figuring it out. So, just kidding, no one laughed. Jeez. Wow, hard crowd. No, listen, so the way that we think about it is very different than traditional incumbents, right? That I think, Huey will be able to share a wealth more of knowledge than I will ever be able to share. But as it also relates, and I'm going to answer your question with a little bit of context, then I'll get to it, to what the folks on the other side of the panel just shared, right? Kind of the distinction between Adyen, Checkout, Stripe, right? There is overlap, but they all kind of have their own kind of different focuses. Stripe might be moving up market, et cetera. But the way that Stripe hit jackpot, right, was they made the on-ramp easy. Mm-hmm. And that's how they took over. Yep. They just made the on-ramp easy, so easy that people didn't even think about it like payments. Yep. It's just like, this is a switch. Yep. That's kind of how we think about ourselves at Novo, just kind of in a tangential way, right? So not necessarily payments, like we're getting into the banking sphere, et cetera. We think about the Novo account as this on-ramp or this validation for the SMBs in which we service, right? So that's kind of like piece number one. Piece number two then becomes that the core product is just that checking account or the hub itself. That core product becomes exponentially more powerful the more connections we're able to add to it, right? Getting back to what your question was, yep. Of when our customers are plugging in all of their platforms that they operate on, and they're plugging in their Stripe accounts, their Square accounts, their Amazon, Etsy, Shopify, whatever it is, the view of the field we have is so significantly larger. Yeah. And so kind of one of the things that I wanted to share is just the tides are turning on just how we think about the quote unquote credit box. Right? Because the way that people do business now and into the future are going to be so different. When you just look at kind of what has happened now in the last 2 years itself as a result of COVID, there were more new businesses created in the last 20 months, 20 months, than there were in the last 40 months before then. Mm-hmm. Like, think about that. That means the velocity at which new businesses are spinning up at is 2x as fast now. There aren't tools to cater to those people because they're almost immediately invalidated by the typical credit box, right? So the way that we're thinking about it, the way that we're building these products is taking in way more data sources in order to more acutely prescribe, how much can we lend to these people? But then the other kind of like the other thing that we have in our favor is that we also control the hub as well, aka the checking account,
Right.
or where everyone goes to.
Rose, what was your impression when you look under the hood
Oh
of
God.
Novo's product?
Oh God. Should I FaceTime Tyler?
I'm loving the off-the-cuff questions, keeping me on my toes the whole time
Yeah.
here. So the big thing that's, obviously I spent a lot of time with Tyler, who is the CTO
And co-founder.
and co-founder at Novo. And one of the things that I think a lot about when I look at infrastructure, so this is something that I really value a lot when it comes to infrastructure, is that agility and the ability to be able to move and be quite adaptable is extremely important. So my usual analogy for this is like if you're building a road, essentially, and you're like, let's say you have a city and you set up a suburb somewhere, and I'm gonna do this as non-technical as possible so everyone can follow along to this wonderful technical story. If you gotta connect these two places together, your first instinct will be to build a road, essentially. And that sounds like the right idea. But maybe when you first build that road, you are unsure, like you don't know what might have to happen. Maybe the population base goes really big and you have to expand to a 14-lane highway, but you can't do that because you built part of the road on the edge of a conservation area or a particular area of water. These decisions that you make early will drastically impact your ability to expand and move faster and grow later. So an engineer who's not used to planning ahead and doesn't know this is the future and here I am today, just builds the road to connect you from A to B. But an engineer who knows what the final state looks like and knows all the little things that need to be adjusted along the way, knows the exact perfect place to put that road so that every future challenge or expansion or need that comes along is accounted and ready for. And that's like extremely important when you're building fintech because it's a heavily regulated industry. It's not like most startups where you can just try and build something and then just see where it lands. You have to deal with reporting, even as a private company. You have to deal with audits. You have to get licenses. These things take years to come around. You can't just start up, build what you want, and be ready to go. You have to be planning ahead. Plus, it's really less forgiving as an infrastructure. Unlike a lot of software, you can't make mistakes. If you make a mistake, you're dealing with people's money, and that's not something that will be will be positively looked upon. And software engineering is still a relatively new industry. I'm sure everyone here has the website is down experience in their life somewhere. That's just not acceptable in fintech. You can't have that type of standard, essentially. And so the bar is higher, the challenges are higher, and the planning is higher. And I spent a lot of time with Tyler in Miami, and the thing that I took away from my time with him is he knows that landscape incredibly well, not just the engineering side, but the regulatory side, which is just so important for fintech. And so when you're talking to him, he's telling you the now. This is what we built today. This is how it's built. And this is why we made the decisions to build it today. He's like, but this is what I'm building in 2 years. This is what I'm building in 5 years. And this is what the plan will look like when it's 2030. And he's anticipating regulatory changes and laws that are about to happen. And so his road probably goes like this, but it is ready to expand into a 25-lane highway with subdivisions all over the place. And that is the general takeaway I had. So hopefully I didn't have to cover any technical stuff for you because you're giving me threats backstage to do that. But hopefully that analogy resonates with everyone about what's interesting about how they're building stuff.
So as you can tell, to get an investment from GGV, your tech stack has to pass the bar of rigorous assessment. You don't need to have a lot, but you better really know where you're going and how to get there. You don't have to build it, but you got to be able to articulate it and not bullshit against. Then I'm going to turn the sort of attention to Huey. Huey's a sort of a legend in the payment space, and she's a key reason why Michael chose to work with GGV.
That's correct.
That's correct. he loves ramen and hot, but he craves for Huey and Raj. So Huey, share a bit more. Like when we first met Novo or any other companies, what's going through your mind of whether this company deserves kind of the time and help and the resources from GGV, and how to decide how to help them?
It's this thing that sounds cheeky, but really, really hard to do, and that is customer obsession. And really, really thinking about what win-win-win could really look like. And so one of the things I remember most when I spoke with Michael was just how much he understood the wants and need of the customers and how he wants nothing more but to help them get back to work. And so things like providing an awesome checking experience, all the way to even sort of pre-defining sort of the way to help them do their work better, right? Identifying some of the softwares that, like my mom and dad were SMBs. They're not the folks in front of a computer Googling, how do you, do bookkeeping better and the likes. And so that was one thing that really mattered. The other thing, which is really, really fundamental and extremely important, especially now, is that they're thinking like an SMB. They're thinking about profitability. They're thinking about the path to actually get things done faster and better without basically bragging about a very large CAC. That is not something that will sustain, especially in this business. And so that behavior, that type of mindset of thinking about how do we reach as many as possible? How do we do it in the most efficient way possible? And what would that take? And what are the things that we need to offer for them to resonate with us was something that really, really struck a chord. And also, I have a very, very special spot for my fellow Miamian. I grew up in Miami, and so when I found a fellow entrepreneur, because for us, it really is a huge dream to bust out of Miami and to be able to actually be having a commercial discussion about how to actually change the world, and that really made a huge difference for me. So.
Totally. I just want to add something real quick to that. Sure. Some things that are floating around the room, right? This concept of access, right? This concept of speed. These are actually two of the three things that we focus the entire company on, right? Access primarily is like, how do we get the most SMBs, how can we help the most SMBs with that on-ramp to success? That they do not usually get those tools anywhere else. Or if they do, at an incumbent, they're charged a monthly fee or nickel and dimed for all sorts of things, right? So how do we lead with that transparent fee structure, giving them that on-ramp, that tool that they wouldn't get. Then speed, how do we just move them faster? How do we move them faster? And how do we just move their money faster so they can do business better, right? And then also the last one is connectivity, something that you alluded to as well. Like how do we just connect that SMB to the world around them and centralize it all for them so they do have that chance, that better chance to succeed.
Yeah. One of the first people that Huey introduced you to was Brad, who ended up joining you guys. Why did you take advice from somebody who's not even your investor yet and recruit someone?
That's
from their list of contacts. Are you nuts?
Well, that is pretty obvious, or at least it should be. Well, I think there were a few things, right? I connected with Robin is really how it all kicked off, right? In December in Miami at an event. Oh, wow. I just connected those dots.
Full circle.
Wow, would you look at that? So met with Robin then. She connected me with Huey, I think in January. Huey and I kicked it off, but it was early afternoon for me, right? I think it was like 1 or 2 p.m. And then I was like, as the new like COVID code, right? You're like, hey, where are you calling in from, right? I'm like, where are you today? Yep. She's like, Singapore. And I'm like, it's got to be like 2 a.m. there right now. Like, what are you doing? Yep. But then we had over an hour, I think it was scheduled for like half an hour, 45 minutes. We had over an hour conversation. We kicked it off with Miami. And then I will remember this, forever. At the end of the call, she's like, Michael, listen, like I don't usually do this on, on first blush, but like, how can I help you? Like everything that you've said is kind of like up my alley, helping SMBs, the product set, yada, yada, yada. And I told her, listen, the beauty of Novo, from the outside in, everyone thinks we have it all together, as startups usually kind of look like. But from the inside out, it's more like, it's really cool because we're still going 0 to 1 in certain places. One of those places was BD, right? And I said, I think BD could have the power to change the game for Novo and how we operate with the world around us. And she goes, got it. I have one single name that comes to mind. I'm like, well, one single name, like I have to meet this guy. Right. But then I looked at his profile, I'm like, this guy will literally never talk to me, ever. Like, why would he talk to me? Anyways, he's talking to me way more now, so that's cool.
What does Brad bring to the table that you didn't have, sitting here on the East Coast?
A lot. First off, a lot, right? I'm just trying to condense that into words. I think what Huey brought up is really interesting, right? Like that obsession with the customer.
Yeah.
The familiarity with the customer is something that you can't really buy. And you can't really even accelerate it either.
Yeah.
I think a lot of people at Novo have become more intimately familiar with our target customer and how to help them, and obsessed with like kind of raising that up for them.
Yeah.
But Brad kind of already came equipped with it. He already knew the language, he knew the problem very, very well. And he was like, cool, like let's get to work.
Yeah. And what other relationships or ideas has he brought to the table that's helpful to you guys?
Yeah, I mean, he's also brought together the proverbial Rolodex. I don't know if people use that term anymore, but like he had one and he showed up with one to Miami. I'm like, it's kind of odd and inefficient. But I'm glad you have one. And so he was able to bring his Rolodex, AKA the industry relationships, right? From a partnership perspective, it's critical for us at Novo, given that we operate the hub of where all of these SMBs effectively work from, right? That hub needs to connect to all of the tools around it, right? All of the tools that push money into the account, as well as all of the tools that pull money out of the account, and all of the tools that help that hold money experience while it's in the account. Brad literally, I think it was like over 100 names that he brought day one. He was like, cool, like let's work through this. I'm like, okay, well, we just, it was almost like a cheat code hiring you. So it was really great. And we had like really, really incredible conversation. I mean, Brad has had incredible conversations that have helped us also think about strategy and color in how we think about strategy in different ways as it relates to some of the bigger industry players in the space. How are they thinking about strategy with their banking product versus not? And it's been incredibly helpful, for sure, to spin up those partnerships.
One last question for you is that there's been a lot of talk about recession and soft or hard landing, and it'll take a while for the IPO market to reopen again, et cetera, et cetera. And one could say that SMBs is a segment that almost everyone else have left. You're still holding fort to service that segment. Will that segment get hit harder than enterprises during a recession? And how do you plan to navigate to still continue to grow during this kind of period of uncertainty?
Totally. Great question. Obviously a very hard one. That wasn't on the list before.
It was not on the list.
But,
and not audible.
Thank you. So listen, we haven't seen this before, but as I share with people internally, like history doesn't repeat itself, but it definitely rhymes.
Yes.
Back in 2020, right before we even raised the Series A, I remember going out to Silicon Valley with my co-founder Tyler, and we started seeing like the paper signs up on the VC windows of like, don't shake hands, don't touch, don't even breathe or look at us, like all of that stuff. And we were like, man, this is weird. At that time, we couldn't raise the Series A. All the oxygen was sucked out of the room. Why? Like, I don't know, were small businesses gonna become extinct? Like, I don't think so, but like no one had, the unknown was very scary at that time.
Right.
What ended up happening after we ratcheted down all the spend, variable acquisition spend, all of the stuff, we actually saw all of our metrics tick up and to the right. Because people were being laid off, people were going at home, lockdowns, et cetera, and people were spinning up their businesses. The reason why I share that is because the customer segment that we service is largely anti-cyclical, and I think a few other people today have shared that same concept. These are the most resilient people like that exist. It's also the economic engine of this country that has pushed us forward for forever, right? But they've largely been kind of like backed up into the corner and kind of like underserved by incumbents, et cetera, as they chase profitability and all of that stuff. So this cohort will always be there. And as you said in your intro today, Hans, right? You guys look for, I think you said something to the effect of like democratizing access to tech. It's Novo's mission to democratize the entrepreneurial American dream. Like, how do we make that easier, better, faster, stronger, to allow people to do it more, right? It's still very difficult to start a business. It's very scary. So like we figure that if we are at kind of the perfect position to just help people do it faster, better, and stronger. And so that's kind of where we sit. As I think about what a recession looks like ahead, I think it's going to be a very challenging time, potentially, obviously. But that's where we're going to swoop in and support our customers the best we can. And I think that will create a flywheel for us to be a more well-known kind of like advocate of SMBs in the country.
And hopefully, Brad's Rolodex of channel partnerships will lead you to better SMBs to serve that should be thriving over the next 2 or 3 years.
I'm going to try and upgrade him from the Rolodex.
That's right. Bradley, at this point, probably thought I would neglected him and be talking about GGV and Novo for the last 20 minutes. But that's more of a setup to see. This is, you see a video of how in 30 minutes a VC take a Series A meeting to see if the VC will invest or not. That's not how it really works. What it really works is the process we just went through. Think about the market, think about the differentiation, think about the moat, and then pulling different domain experts, technical experts to help us to figure out whether this team has what it takes to really scale. We don't have someone on the team, on this panel from our platform team who, led by Jen, ask questions on talent practices, people practice, to see if the team is ready to really scale multiple dimensions and levels. The reason I have that set up is partially asking Bradley, you have picked companies well. Joining Adyen wasn't the most obvious thing, especially in the US. Most people have never heard of Adyen when we mentioned that as investment opportunity back in 2016. And from that, you joined Checkout.com, which people thought, hey, there's Stripe, there's Adyen, what do we need at Checkout.com? How did you decide where to go? Because the VC have to allocate capital. You allocate your time, your commitment for the next 4 years, 5 years of your life. How did you decide to join Adyen? What did you see back then? And how did you see when you decided to join Checkout.com?
Yeah, I'm tempted just to say dumb luck and just leave it at that. But luck and timing, probably the most 2 important factors in life. Obviously, old adages, the harder you work, blah, 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 the more lucky you get. But payments is a complex industry. Many of the companies that you guys will be investing in are incredibly complex. They're new industries. It doesn't matter if you went to the best business school in the world and were doing organizational studies, you don't know how a DAO operates, There's constantly this sort of whack-a-mole to knowledge around, especially I think fintech, because it encompasses so many different competencies which make up the synergies that ultimately form the likely success of a business. I'd been bouncing around payments for a little while before joining Adyen. Like no one as a little kid dreams of being a payments professional.
Really?
It's like, well, it's top 3, astronaut, football player, payments professional, right? So, so number 3 I picked, but you do the job because kind of partly it's a job. Then you start going down the rabbit hole and you learn more and more and more and you realize how broken it is. And everyone just accepts that it's broken because it has been for so long and people viewed payments as a commodity and then suddenly it was about technology. And understanding that there was a value chain was probably the big aha moment for me, speaking with Adyen for a long time before taking the role with them. And then them giving me kind of carte blanche to say, well, look, it's APAC, we're just starting out here. That as a personal sort of goal was really appealing. Payments is like capitalism in some ways. You go down to the macros, it's about demographics. So being based in Southeast Asia for me with Adyen felt like a wonderful opportunity as broadband and smartphone proliferation was growing. It felt inevitable that payments was going to be a core driver or enabler of the success of so many other businesses. Payments as a business is also incredibly good. Like I'm really privileged that I can be talking to CFOs of those companies I shamelessly name dropped at the introduction on almost consecutive days of the week. So I get this really privileged insight into what Meta's thinking, what Google's thinking, what a Netflix is thinking. And Adyen was, in my mind, in those days, positioned to just do something different, collapsing this value chain, internalizing all of those costs, avoiding this API pinball game. You don't have to be a technical savant to realize that, 12 API. You just walk upstairs, done that. 12 API calls down to 4 would probably mean faster, less technical fail points, more efficiency, more cost control. Like, again, it wasn't rocket science, but that's all in hindsight. At the time, it was like, I wonder if this will work. And then when it did work, it was great. And we saw Stripe grow up kind of alongside us almost at Adyen and start to become relevant, albeit with a very different market focal, especially in 2012, 13, those sort of days. And then with Checkout, it was a conversation, as often is the case, with a very charismatic, very intelligent man who is Guillaume, the CEO.
He's amazing.
And it was the fact that I felt that I could come in and help. And for me, that was appealing, that he was sitting on top of this exact architecture that he'd created based on his knowledge of payments. And it was really about understanding about how do you convert what is a great technology platform into a great go-to-market strategy. And I felt that, again, this experience I had at Adyen was going to lead me to help kind of paint that picture for a checkout. And obviously go-to-market is a complex thing, but it helps a lot if you have the best product underpinning that. It's really about how do you kind of peel the onion to a point where the value that's derived from working with someone like us is easily understandable, and then obviously we can hopefully replicate that messaging across our teams to take that message out to market as well. So a bit of a convoluted answer, but Adyen was a sense that maybe a new technology stack was what the payments industry needed,
Right.
and then checkout was a chance to basically look at what Adyen did right and wrong, to be fair, they were not perfect, and say, well, if I can find someone who's built this exact technical architecture, knowing that to get your acquiring license takes 4 years, by the way. That's when we talk about moats. It's a huge moat around payments on the licensing side. And they were just primed with one license to explode. And that's obviously what we've done since 2018.
Yeah. I'm getting a chance to advocate for checkout.com even a bit more. Stripe is an amazing company. I think Rare's articulate extremely well. What are the other additional enterprise-grade services you're providing to make it so that your customers want to stay with you?
Well, I actually think it's the opposite of that in some ways. It's about focus. Because if you look at what Stripe has done, and they've done a very good job of this, is they went lateral.
Yeah.
As in, if you're servicing an SME, what does an SME need? Well, they need you to incorporate their entity. They have that service. Yeah. If I go to Amazon and say, I can incorporate you, they'll be like, thank you so much. We don't really need that. So a lot of it was about saying, in our world, payments is not an ERP system. It's not CRM. The reason I kind of use those examples is that you don't want multiple ERP systems normally. You don't want multiple kind of CRMs. Most contracts that you license from your software providers it fulfills your need for that aspect. Payments is way too important, to your point around people's money. The framework I use is actually, I just steal it, Maslow's hierarchy, right? Everyone knows what it is. And that bottom benchmark is hygiene, which basically means safety. And so the first thing that enterprises build in is resiliency, which is you do not single thread your payments. So me going laterally and saying I've got huge stickiness, Stripe Connect as a marketplace platform, so good. But I really don't think that an Amazon or an Airbnb will ever use that because they don't want the Swiss Army knife of payments. Swiss Army knife is great. It's that knife that you get when you're 8 years old and it has a knife and it has a screwdriver and it's fun. But like if you're building your garden shed, you're not going to use it. You're going to go find the best screwdriver. When you're sawing the tree down, you're going to use the best saw. And I think that's how enterprises approach it, is they don't actually want that bundling. For SMEs, it works super, super well, and it creates immense stickiness and value. I think at the enterprise level, they're looking for the best tool for the job. So in our world, it's about saying, well, do we want to be the everything to everyone? No, but I want to provide the core of our services really, really, really well. And then for the things that we don't think we do well, we want to have a really strong partnership proposition that I think we've built out a very effective ecosystem on that front too, for the bits that we know are tangential to what we bring to the table, but equally working on the assumption that if you are these major $100 billion plus companies, they don't need us to go source a KYC provider for them. They can go do that themselves. They have the resources.
Right. We have 2 minutes left. I'm going to quickly go down to each one of you and say, what is one thing that keeps you up at night, that worries you? Like, oh my God, in the next year, 2 years, this is what I worry about the most. And then what's the other thing that excites you? It's like, despite all that, this is what I'm counting on.
Am I starting here?
Yeah, start with Rush.
Oh. Again, off the cuff questions. For me, the biggest thing that keeps me up at night is mostly, I think, it is the infrastructure question relates to me because I do look a lot at people's infrastructure at different companies and all the ones that I work with. It's other people's infrastructure is the thing that I stress about the most because it is something that is so core to the thing I love the most. Like, I love building. It's my favorite thing to do. I love understanding how to build things and the patterns. And when I see something that I know, like you guys all build companies, it doesn't have to be perfect to work. It just has to work. But that doesn't always last forever. Eventually, that strategy can catch up with you, and that's when the slowdowns happen. So what keeps me up at night is when I look at all these different things that are like, okay, can we fix this? And I just want to get in there and fix it. But I have to be patient and work with people and take the time to navigate everyone through the journey. When I'm like, just please let me in there and let me go in and just like rip it all apart and redesign it. But that's obviously, everything takes time. So that's one thing. But the thing that excites me is that the software industry just keeps evolving. It keeps getting better. There's more tooling that takes away the complexity of having to build everything from scratch. 10 years ago, it was crazy. Imagine, I still find the craziest story that Roller Coaster Tycoon, that was like this crazy game, was built on assembly code, which nobody could do today anymore. And so the fact that the tooling has come so far away now, so long, that it's really, you don't have to build everything from scratch. And that's really exciting because When you don't have to do that, the opportunities get way more massive for what you can construct.
Bradley?
Yeah, I like those points. It's a lazy answer in some ways, but macro environments do worry me right now. It's rare that we've seen what we're seeing with hyperinflation. We could say that the flight to the dollar is a good thing, but when you're ultimately kind of inflating away value, it's not maybe the best long term. Wars in Europe don't bode so well. China's productivity decreasing with obviously the socio-economic problems based on demographics that they're likely to confront as well. I mean, none of these things bode well. I liked globalization. Yes, I don't like the loss of localization and culture, but I like the fact that the world's coming together. Like the top of our value chain is we're all humans, right?
Right.
So that's kind of where we felt we were moving towards, and it feels like there's a little bit of regression politically, socially, economically, and that's not good for international businesses like mine or many of the others in this room. I think that's going to be too divisive, and I don't think it helps anything, and there's nothing we can do about it. And that's probably why it keeps me up at night, because I can't fix this problem.
Right.
This said, do we have a recession, depression, something looming? Are we in one already? I don't know, but the word evolution has come up a lot. You mentioned it in there. It's obviously called evolving E, right? But evolution works best when you have a harsh environment. And I think that you need to thin the herd right now across fintech in general. I think a lot of the valuations were way too fluffy. I think a lot of the companies didn't have a path to profitability. And I'm actually, again, selfishly from Checkout's perspective, quite excited for the really robust businesses to get stronger and show their resiliency through this time. And if I had to pick one area, look, I'm in payments, right? But I really like the advent of blockchain, and I really think that we're moving away from speculation on expensive JPEGs and meme coins to real utility. I'm a real believer in that, and I think that's going to converge really well with my sector specifically to actually solve problems and drive the world forward on a 2 to 5 year basis.
Yeah. Great. Huey?
Well, I've been in payments and moving money my entire life. And when I see moments like this, I am worried about those that may want to earn that money differently. All the people that may want to steal your identity and source. I actually think that the flare up in a downturn tends to be one where we'll probably see more and more of that. It's amazing to see the amount of digitalization and sort of what COVID did in terms of putting a lot more people on the grid per se, but I know that's gonna be a thing, and it will continue to be a thing. I also think that all of that will be made more complicated as the world turn away from each other, and the laws and the rules that will start to come together in terms of what you can do, to your point about international businesses. The world is going through a bit of a divorce, and there'll be more and more regulatory requirements in order to fulfill sort of the private, the consumer needs. At the same time, it may inflict on a uglier experience. So there's these type of complicated issues that I think we'll have to deal with. As for things that I get excited about, once an operator, always an operator. And despite the ups and downs, there's just still so much to do. So much. I mean, we talk about the world that's actually, digitalized. It's just still a small fraction. And none of the big players actually makes up even a huge number per se. I think it was like 30%, if I remember correctly. 70% of commerce is still not done online. So as much as I get sad about the way that people view this industry, I think that there's still plenty of work, and the work needs to get done so that we make ourselves more productive and we can deliver more to the world.
Michael?
Cool. I will keep mine short since I know we're almost over. What keeps me up at night? Just to give a little context for those in the room that don't know. So Novo is still a very early stage relatively early stage company. We've grown a lot in the last 2 years, like a lot. We started last year, 2021, off, I think we were about 30-ish employees globally. Fast forward to now, we're about 300-ish employees globally. That's scary to me. Mm-hmm. And what keeps me up at night is not, how big the opportunity is and all that stuff. It's more, personal as it relates to culture. Like culture is very hard to manage, especially with a rapidly growing organization. But then when you throw in the other variable of a potentially virtual environment as well, it's even more difficult. So as I kind of have the, the rear view mirror view is like when we were all very small and all under one roof, like trying to keep that today is very difficult. So just trying to bridge that gap is, something that I think about a lot. What excites me most about the world and Novo, specifically, is we're evolving as a company away from the typical kind of definition of what a challenger bank is considered to be, right? Just the checking account plus debit card, the one-trick interchange pony. Like we're evolving away from that. And one of the ways that we're positioning ourselves now is that that's just one layer in the layer cake. But I'm way more excited about all of the other layers and where we're actually going. As it relates to access, speed, connection, right? We're going to be doubling down on both speed and connection in a very big way, where we're going to start moving into just a category of our own and kind of work toward just redefining what people can even expect from a checking account. So that's what excites me most.
Great. On that note, thank you everyone for being on this amazing panel. Great discussion.